Both markets are showing signs of summer fade. There were 32 contracts signed. That is one more than the previous week. We're still seeing these markets maintaining a kind of a neutral, balanced state. Welcome to this week's look at the state of the New York City real estate market, where I take a look at the luxury market, the Manhattan market, and the Brooklyn market. I do it because I want you to be informed. It never hurts when you're a consumer to be informed. Welcome to this week's look at the state of the New York City real estate market. This is for the week of June 19th to the 25th. We're going to get started, as we always do, with the luxury market. Then we're going to move to the Manhattan market and then the Brooklyn market. Then I'm going to give you my thoughts and my takeaways, and then we're going to wrap it up. Last week in the luxury market, there were 32 contracts signed. That is one more than the previous week. Again, in the luxury market in Manhattan, that means these are properties that are priced at $4 million and above. Condos outsold co-ops 23-7, and there were 2 townhouses in this mix. The number one contract signed was Penthouse 36 at 500 West 18th Street. It was asking $52 million. It was reduced from $65 million when it was offered off of floor plans in 2018 by the original developer. It is the most expensive apartment to go into contract downtown this year so far. This condo unit has over 6,900 square feet. It includes 6 bedrooms, 7.5 bathrooms, surrounded by an almost 4,900 square foot terrace with views in all directions. It is in a condo called One High Line. It is a project with 2 buildings. We've talked about this project before. It's a condo and a hotel. Amenities include a fitness center, a 75-foot lap pool, spa treatment rooms, a golf simulator, children's playroom, private dining, a games lounge, and a garage. Services are offered from the adjacent Faina Hotel, which is part of the project. The number 2 contract was the 12th floor at 515 Park Avenue. It was asking just under $15 million, and it has been on the market since February. The full floor condominium has 5,000 square feet, including 6 bedrooms and 6.5 bathrooms. The corner living room, library, and 3 bedrooms face Park Avenue. The owner paid $17.2 million back in November of 2015. Amenities in this building include doorman, gym, and storage. The stats for last week are as follows. The total weekly asking price sales volume, 270,976,700. Average asking price, 8,468,022. Median asking price, 6,372,500. Average discount from original ask to last asking price, 9%. Average days on the market, 564. That's it for what happened last week in the luxury market. If you have any questions at all, please post those below. We're beginning to see signs in the Manhattan market of the summer fade. We're going to get started with the 1-week look at the market. The supply, 291, down 1.4%. Contracts signed, 194, down 6.7%. Off market, up 14%, 196. The 1-month supply, 1,387. That is down almost 26%. Contracts signed, 992. That also fell almost 8%. And the off-market properties are rising a little over 54%, 749. If we take a look at this market pulse, we're also seeing this kind of staying neutral. We're not seeing a whole lot of change, although we are seeing a change in the liquidity pace. We were seeing numbers over 1,000 for that 30-day look at the contract activity. It's now in the high 900s. We would expect this to continue to fall as we move further into the summer. The Manhattan inventory is cooling down as the summer is warming up for the supply. In terms of the demand, the pending sales slid another 1%. Again, we're starting to see that summer slowdown. When it comes to new listings, we're also seeing those new listings ticking down a bit. This is in line with historical trends. This time of year, we are used to seeing that happening. The weekly contract volume dropped 7% from last week. So we're going to take a look at this median sales price chart. The median sales price popped up a bit in April and May due to more closings in the $2 million to $4 million range. Interesting to take a look at that. As you know, our data is a little delayed here because our closings take a little longer to happen than as compared to other markets. But it is interesting to see that we saw more closings happening in this price point, $2 million to $4 million. That's it for the Manhattan market. Again, any questions, please post those below. We're going to shift over now, take a look at what happened in Brooklyn. So just as with Manhattan, we're also seeing a bit of a decline in the inventory with Brooklyn. However, we did see a little bit of an increase in contract activity. We're going to start with that 1 week look at the Brooklyn market. The supply is down 11.6%, 175 for the week. Contracts signed down 2%, 146. Off market down a little over 4% at 71. If we take a look at the 1 month look for supply, that is down almost 18%, 829. Contracts signed 644, down almost 14%. The off market 296, that is up over 44%. The market pulse is showing this neutral market is rising a bit, moving up a little stronger than in Manhattan in terms of where we're at with the market. But again, just as with Manhattan, we're still seeing these markets maintaining a kind of a neutral, balanced state. If we look at the liquidity pace chart, 644 for this moving 30-day window of contracts being signed. We're falling a bit here in terms of contract activity, although we did see a little bit of a pop for last week in contract activity. This is in line with the season. We would expect to continue to see the contract activity decline as we move further into the summer. The Brooklyn supply barely declines from last week. The Brooklyn demand did tick up for last week, but we wouldn't expect to see that to continue too much longer. The new listings for the week did tick down a little bit. This is in line with the seasonal trends. And the number of contracts for the week held steady. We'll have to keep an eye on that and see if that continues. Likely, as we move closer to the summer, that will begin to slow down a bit. Similar to Manhattan, if we take a look at this median sales price chart, the median sales price in Brooklyn did pop a bit in April and May. We knew that was, especially May, those were our strongest months for the spring season. And now that we're starting to get that data, we can see that we saw that pop, and we can see that confirmed in the data charts. Okay, that is it for the Brooklyn report for last week. Let's just sum this up. Let's start with the luxury market. There were 32 contracts signed in the luxury market. Again, properties priced at $4 million and above. That is one more contract in that sector of the market than was signed the week before that. Pretty good indicator that that part of the market is holding strong. Condos continue to outperform. Co-ops 23-7 for last week. Townhouses are in there as well. There aren't as many of them in Manhattan, and their numbers just aren't as strong. If we look at the Brooklyn and the Manhattan markets, in Manhattan, both the supply and the demand were ticking down for last week. In Brooklyn, the supply was ticking down slightly, and the demand did pop up slightly. Both markets are showing signs of summer fade, and both markets remain neutral and balanced for the moment. As far as price action, very likely prices peaked in March. We are still awaiting that data, so we don't know that 100%, but as the data is coming in, there's good reason to think that from a price action standpoint, the prices likely did peak in March. From where we're at now, we're probably around 4 or 5% off from where we were. Takeaways, sellers, gonna say the same thing. Get your deal done before we really get into the summer slowdown. If you are not getting the offers, showings that you want, it's your price. If you've been on the market for a while, it is your price. So make your adjustment and get your deal done. Buyers don't expect a lot more inventory to come on the market. This is probably the choice that you have in terms of what's out there. You may get a few more things trickling into the market. If you're looking for leverage in terms of pricing and negotiability, look to those properties that have been on the market for at least 120 days. Okay, that is it for this week's look at the state of the New York City real estate market. As always, my thanks to Urban Digs and to the Olshan Luxury Market Report. The work that they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.